Hello and welcome to the Global View on this Wednesday. I'm Andrew Gagan. Thanks for joining us again here at AusBiz. Let's get across what happened overnight. Global shares rebounding, although volatility remains amid concerns over the impact of AI and President Trump's tariff policies. Tech stocks led the gains on Wall Street, with semiconductors outperforming, and AI lab Anthropic announced several new AI tools targeting areas such as investment banking and human resources, which it says is designed to customize their specific software, not replace it. Well, IBM recovered, while Apple led the Mag 7 higher, although Alphabet lagged, and Nvidia will report quarterly results tomorrow morning our time. Advanced Micro Devices will sell up to $60 billion in AI chips to Meta platforms over the next 5 years, in a deal that would allow the Facebook parent to buy as much as 10% of the chip maker. Salesforce advanced to be among the Dow's biggest percentage gainers. Shares in Keysight Technologies surged after the electronic equipment maker forecast second quarter profit ahead of Wall Street estimates. And Home Depot gained after the home improvement retailer beat fourth quarter estimates and maintained its annual forecasts. And in just recent news, Warner Brothers Discovery saying that Paramount Skydance has raised its bid to acquire the entertainment and media company to $31 a share. That revised offer raises the heat on streaming giant Netflix. Those two bidding for Warner Brothers. Let's turn to what's going on at a macro level. United States Customs has begun collecting a temporary new 10% global import tariff, but the Trump administration was working to increase it to 15%. That's according to a White House official. The move has created confusion and uncertainty around US trade policy, with no explanation as to why the lower rate had been implemented, although President Trump may offer further clarity when he delivers the State of the Union address in Washington in just a matter of hours. FOMC member Austin Goolsbee has said the Supreme Court's decision to strike down President Trump's tariffs may cause more uncertainty for businesses, but could also help cool inflation, saying the dynamic of low hiring, low firing, which I believe came from business uncertainty, is made even more solidified by adding more uncertainty. That said, it could bring relief to the inflation side. Meanwhile, US private payrolls rose by almost 13,000 last week, consumer confidence rising along with future expectations. US Treasury yields little changed as investors consider the implications of the new tariff regime. The US 2-year Treasury yield at 3.46%, the 10-year at 4.03%. The Australian 3-year government bond yields around 4.26%, the 10-year at 4.7%. US dollar index up slightly on the day. The Aussie trading at 70.6 US cents. Oil prices have fallen after Iran said it was prepared to take any necessary steps to clinch a deal with the US ahead of nuclear talks later this week. Brent futures 1% lower, just under $71 a barrel. Investors took profits in gold, which saw it ease from a 3-week high. Spot gold down more than 1% at around $5,160 an ounce. Copper was up 2.5%. Iron ore up around 1.5% to $99 a ton. And Bitcoin remains below 65,000 now, close to 64,000 US dollars. Let's get across those market moves with a focus on Wall Street. Peter Cardillo, Chief Market Economist at Spartan Capital, joining us again now. Peter, welcome back. So, I guess there are two dominant themes at the moment. Certainly AI and the disruption it's causing in markets, particularly for those tech stocks, and also Trump's tariffs. How is this playing out, particularly for equities at the moment?
Well, it's keeping volatility high, and we have a plus day and we have a minus day, and basically we're going nowhere, and that's because of the uncertainties that continue to grow. And now, today the 15% global tax kicked in, and so the market rallied, but it rallied because there was less pressure on the software companies, and that helped sentiment, along with the fact that Home Depot came in with better than expected earnings. And of course, there was also a little bit, I would say, a little bit of enthusiasm as the market awaits the State of the Union message just in a few hours. And basically, what we already know is that the president is going to elaborate on the economy, and it looks as though he might he's going to ask Congress um, for more tax cuts on a corporate level and personal level. That might be very appealing for the stock market and even for the economy to a certain degree, but it's certainly not going to be good in terms of future deficits. And that means that we could see gold and silver make new highs rather shortly.
Well, indeed, and also to that point of I gather the US has raised already some $170 billion in tariffs. There's a question that remains as to whether they actually need to be refunded. We've already had a number of companies sort of looking at that possibility.
Yeah. Well, I'm going to, basically, President Trump last week said, that probably be tied up in the cost for a couple of years. And by the way, FedEx just the other day sued the government wanting its money back, and there'll be a lot more, and there have been others. So it's going to be a lengthy process, and the real question is, how do they pay it back? And I guess they have to go to the capital markets, raise money, more sovereign debt. That means that yields are not likely to do much of anything on the downside, possibly move higher. But again, it'll be a while before we know how that plays out.
And so given that ongoing uncertainty, and Peter, you're obviously still very much favouring precious metals.
Absolutely. Look, the list of worries continues to grow. And I think the world is, I think investors on a global basis have really come to the conclusion that while everything looks so rosy and, how shall I say, that maybe the sky is the limit, but I think that smart money and many, even I shouldn't say maybe just smart money, but even other unsophisticated investors are beginning to realize that they need to hedge. And that doesn't mean you need to put all your money in precious metals. Let's understand each other. That probably would not be the right thing to do. But you need a certain amount. And that certain amount is there to hedge against the unknowns. And so I think that the markets have rediscovered that the perfect hedge against turmoil, against inflation, against geopolitical problems, against soaring deficits, against paper currencies is gold, and nothing but gold and other precious metals such as silver, palladium, and platinum.
Now, energy has also been on the move, in particular oil, Peter, particularly in regards to the developments between the US and Iran. It looks as though Iran has now reached out again, perhaps to say, look, we're happy to make a deal. I guess we'll find out at the end of the week when they have those further nuclear talks there. How are you seeing oil behave at the moment?
Oh, look, I'm bearish on oil. Fundamentally, oil doesn't belong trading where it is right now. It's up there because there's a geopolitical premium attached to the price. And Trump has said that he actually gave a time frame, and that time frame is halfway through now. So, he says if there's no deal, that he will strike Iran. But he also said that it'll be a limited strike. So we know what happens with limited strikes. The price of oil goes up. It anticipates when it happens, it goes up. And then after that, it comes right back down because the fundamentals are not there to support it. But I truly believe that Iran does not want a regime change. The United States doesn't want the price of oil to spike up to over $100 and stay there, even though I don't think it will. But that possibility could if we were to get engaged in some sort of prolonged war. which I doubt that's going to happen. So I'm convinced that Iran will strike a deal. Will it be a perfect deal what the United States wants? No, but it'll be a deal that will limit the capabilities of nuclear warheads, and I think it also will be a deal that the United States can say, "Hey, we made a deal." So I think that's probably going to happen, and I think oil prices will go back down to under 60.
Peter, thanks for your analysis. Thanks for joining us on Spartan Capital.
Thank you for having me.
Let's now turn to the local market. Ahead of the open on this Wednesday, we're looking for a positive start. SPI futures up around 0.7%. Many company results to get across this morning, including some heavy hitters such as Fortescue. WiseTech's also out. Woolworths among those reporting this morning. And a key data point today too. Later this morning, we'll get the latest read on inflation with the January CPI. So that will be critical, certainly, as perhaps what the RBA is likely to do at its next meeting next month. Stay with us. We'll get across the open very shortly.